Many thanks for joining us. Welcome to Business Morning. I am BC Adebayo. Let's begin the show with the latest coming from the crude oil markets, where prices are down this morning, pulling back yesterday's gains on growing concerns that surging COVID-19 cases in the world's biggest oil user, the United States, would limit the upside in energy demand. Brent crude was trading at $42.71 a barrel in early trade, while U.S. WTI futures were seen at $40.21 a barrel. Meantime, traders are also closely watching prospects for U.S. fuel demand, with 16 states reporting record increases in new cases of COVID-19 in the first 5 days of July. Also, data from the American Petroleum Institute Industry Group, scheduled to come out later today, and the U.S. Energy Information Administration data, planned to be out tomorrow, are expected to show a 100,000 barrel rise in crude oil stockpiles, and 6 experts polled by Reuters had estimated that. And back home, Mr. Lamido Yuguda has taken the mantle of leadership at the Securities and Exchange Commission as the Director General, and he says the country's capital market has lots of potential for growth and development post-COVID-19 and beyond. The new head of the SEC, who made this known yesterday in Abuja, while resuming alongside 3 executive commissioners, explains that the Capital Market Master Plan, which was launched in 2014, has the objective of positioning the capital market for an accelerated development of the national economy. Mr. Yuguda assured that investor protection remains a major focus for the capital markets regulator, while the new management will continue to work with other relevant stakeholders to promote and implement initiatives to improve the regulation and development of the market. Well, let's just do a quick review of the Nigerian equities markets yesterday, talking about activities there. And we've seen that the bears have just refused to let go of the market. We saw negative sentiments continue yesterday, with the all-share index shaving off 1.27% to 24,026.05, and that also brought the month-to-date and year-to-date losses to minus 1.9% and minus 10.5% each. Investors lost about 162 billion naira as the equity cap fell to 12.533 trillion naira. And total volume of trades increased by 31.4% to 189.69 million units, and that was worth 2.78 billion naira. And we saw that exchanged in 4,216 deals. Market sentiment remained weak yesterday, as we saw 14 gainers as against 17 losers, and it's a mixed bag on the sectoral chart. Now looking at the indices, we saw 2 financial services sectors gain, while the other 3 declined, and those losses from the banking stocks we saw last week. Investors take advantage of the lower prices to position themselves and push the counter higher by 1.51%. We'll take a moment now and we'll look at our domestic commodities market. Welcome back. We have the head of research at the financial derivatives company, Damilola Akibemi, who's right here with us in the studio to talk us through some of the latest burning economic issues. Good morning, Damilola. Thanks for coming on the program.
Thank you.
So we've seen the federal government tell us now that there's going to be a planned closure of the 3rd Mainland Bridge from July the 24th, and that will be for about 24 months. We know the implications of this, of course, talking about the traffic implication of this and the fact that it's estimated that every hour of additional traffic costs $1.97 million. So yes. Where does this leave us?
Well, yes, because of the state of infrastructure in Nigeria, so you need to actually rehabilitate the road structure and what have you. And definitely for every hour of traffic, or the amount of hour you spend in traffic definitely has its cost implications. There's the economic implication. There's also the cost to productivity, because you spend longer hours in traffic, you get to work, you're tired, you're not as productive. And if productivity drops, definitely output levels will be affected. And if output reduces, revenue too will also be affected. So it just also raises the issue about the fact that for a populous city or densely populated city like Lagos State, our means of transportation are quite limited. I mean, we have the waterways they are not taken advantage of. In cities such as London, India, where they have densely populated areas, they have the rail system. So why can't we take advantage of that? So definitely the infrastructure system in Nigeria needs to be looked in and looked upon. And also even just looking at the road network, there are very few options, because once the Third Mainland Bridge is closed, your other options are maybe Carter Bridge or Echo Bridge again. So definitely there needs to be an expansion of the road network. We need to take advantage of the waterways and other means of transportation, such as the rail system.
And perhaps more companies need to actually embrace the idea of working remotely to, of course, reduce the amount of cars that we have on the road.
Definitely, and with COVID has forced everyone to adopt the virtual means of working, and so definitely, so I'm sure, as for instance, in Lagos, the amount of traffic has reduced. So with that focus or shift towards virtual work, towards teleconferencing, so the pressure on the existing infrastructure definitely is reduced, and also even gives the government ample time to actually maintain this infrastructure. So definitely virtual conferencing does, and virtual work does have its advantages.
We're still talking about transportation now. Of course, some of the airports are set to reopen this week for domestic flights, and yesterday we spoke to the DG of the NCAA, and he told us that all hands are on deck to ensure the safety of passengers, as they travel. But then, what is your assessment of preparations for this so far at the FDC?
Well, definitely the aviation industry and the regulators at least they've done quite a few things to actually ensure that they meet up to the required regulation and whatever. But also there's that sense of responsibility for each person to ensure that, okay, protective measures are being adopted. And 2 airports are going to commence operations tomorrow. That's Lagos and Abuja. And these are key cities. One is the commercial hub, the other is the state capital. And definitely the impact would be significant, because then it also encourages output. It also encourages to boost economic and business activity levels. But if you're going to compare Nigeria with its peers, definitely there's still a lot that needs to be done. And to actually get to that level of ensuring compliance to the protective measures, ensuring that even the people, the officers that are on ground to ensure that people adhere to this washing of hands, temperature checking, and all that, actually do their job. It takes a collective effort from all stakeholders.
All right, now let's talk about the IMF. Now, of course, recently the fund predicted yet again that Africa will need more financial help to avoid long-lasting terrible consequences as a result of the COVID-19 pandemic, and saying that the continent faces the worst economic shock since the 1970s. Is there really no end in sight to all these gloomy predictions?
Well, first of all, Africa, the continent, if you compare it with other continents, it's not as developed. And you have a lot of, in terms of infrastructure, we just talked about the infrastructure system in Nigeria. Most African economies have very weak, poor health facilities. So in order to actually combat or address these challenges, that the resources are not that available. And again, if you also look at the fact that there are other challenges that the continent is facing prior to the COVID pandemic, we were already experiencing oil price shocks for the oil-producing economies. There were also health crises like Ebola in the Democratic Republic of Congo. So these challenges were already prevailing before coronavirus struck. And also, most of these African economies have been over-leveraged. The debt-stock ratio compared to GDP in Africa is over 40%. That's quite high. And we know that a lot of them are asking for debt relief, waivers, and what have you. So with that said also, the level of infection cases in Africa, if you compare it to these other continents, is actually relatively low, but the economic impact is going to be more severe. The poverty rate is quite high in most African economies. Also, if you even look at the per capita income, because most African economies have a large population base, so the level of income per individual is quite small. And definitely this is going to have an impact on the economy. So the countries such as Ghana, Senegal, Ethiopia, that were among the fastest growing economies prior to the coronavirus, are definitely going to experience sharp declines. But it's not all gloomy, because even these countries that I've mentioned, because also in terms of their population size relative to the likes of South Africa and Nigeria, they are smaller, so they obviously may record a faster pace of growth. So definitely we're going to see that sort of like an uneven recovery amongst African nations. And again, as the global economy starts to pick up, because the African economy is the recovery of the African continent is subject to the recovery of global economies such as the US, China. So as global trade picks up, as economies start to recover and to reopen, we should see that play an impact on African economies. So we start to see remittance flows increase and what have you. So it's just that obviously to take a longer time compared to other continents. But it's not just all bad news.
But of course, the governments are not just sitting back and folding their arms.
They're
so
doing
how would
quite a
you
lot.
rate their assessments? I mean, how would you assess, their response to ensure that this pandemic doesn't have, a dire impact on the economies?
Well, in all fairness, I would actually say that most African governments reacted quickly. But again, it just speaks to the amount of resources available to them. They don't have the infrastructure. They don't have the institutions. They have a lot of weak institutions, a lot of political instability and bureaucracy, high corruption. So these challenges actually, it's not as if it's not present in the developed economies, but obviously it's more pronounced in Africa. So it's these challenges that actually are going to make the impact more severe on African economies.
Now, let's talk about the latest developments in the crude oil market. Of course, this morning we saw Brent trading at about $42 per barrel. The volatility in that market continues.
Yes. Okay, so right now, like yesterday, the news about Saudi increasing its oil price to its Asian market obviously supported oil prices. But as at this morning, there's information about the fact that the rising coronavirus cases in the U.S. could dampen oil demand. And the U.S. gasoline inventory report is going to be released soon, and there are forecasts that it might increase. So this actually dampened the market sentiment about oil prices. But with that said, it's a commodity, so it's definitely volatile to oil prices. I mean, to external shocks and what have you. But the thing about the oil market is right now, it's also a function of demand. We know that it's the major market, so China, Europe, these countries are beginning to reopen. China recorded a GDP growth rate of about 1.1% in Q2 from a contraction of 6.8% in Q1. So just shows that the largest oil consumer is already showing signs of a recovery. Also in the US. So it's definitely those factors are going to be playing on market sentiment. And as long as there's that risk of a resurgence in infection cases, it's still going to keep prices low. But then also the supply cuts, compliance levels are increasing. So on one hand, you have the factors that are going to support prices. On the other hand, you have those that would limit whatever price gains are going to be recorded.
Now, bringing things closer to us now, the CBN has issued a 6-month ultimatum to regional banks to expand their operations. Of course, the CBN says that this is to promote the spread and balance of regional banks across Nigeria. But looking at the time when there's a need to promote virtual banking and social distancing due to COVID-19, do you think that, what do you think about this?
Well, first of all, the CBN's plan is actually to increase financial inclusion, and the rate is about 63% right now in the country. So that's not bad, and they're aiming for 100% financial inclusion. So that directive is just to try and at least broaden the base. The base of people that have that are exposed or have access to financial transactions and banking and services. But now, with that said, again, it's occurring at a time where there's now that shift to virtual work. And so what it just means that obviously banks will need to be more creative. So obviously that shift from the brick and mortar model to actually, oh, can I conduct my transactions online? So, for instance, we know that e-payment transactions increased in the month of May. So that just shows you that there's that shift towards electronic platforms. So definitely, even if, fine, as a bank, you need to expand to another geopolitical zone, maybe the number of branches that you would require or you are going to open might not be as much because now there's more focus to virtual. So banks just have to be more creative and strategic, even in carrying out the CBN's policy.
Now, let's talk about the movement in the external reserves. Now, we've seen that they've continued to decline steadily, and the currency stand at $36.1 billion.
Yes, okay, so the decline is because we are not receiving as much forex inflow. So we've talked about oil prices. So definitely at $42 per barrel, that's still we still bring some sort of comfort. But bear in mind, again, oil production in Nigeria is being pressured to comply with its OPEC quota of 1.4 million barrels per day. So we might still see further reduction in production. So that definitely oil proceeds are a little shaky at the moment, and remittance flows are declining also. So that pressure we are beginning to see, or we've been seeing and we'll continue to see on the external reserves. And why we saw an initial increase was because of the drawdown from the IMF loan. So obviously, as World Bank, we're trying to get about $1.5 billion also. So the more international funds we get, obviously, it would boost the external reserves. But the forex demand pressure is still there. We know that airports are going to open, at least for domestic flights, and are considering resuming or reopening international flights. Once that starts, then the forex demand pressure would heighten. And as that increases, obviously, there'll be more pressure on the external reserves. But now, with the CBN talking about the unification of exchange rate, obviously, there's going to be some adjustment. We already know that the retail forex rate is being moved to 380 naira per dollar from 360. So the more expensive it is to buy dollars, obviously, is mopping up naira liquidity, and that should address to an extent the forex demand pressure. So at least in the short to medium term, we may see some relief or respite in the depletion of the external reserves.
So with all of this now, where are we in terms of commodities prices, and give us an outlook?
Yeah, so for commodity prices, so for instance, we're still in the planting season, but towards the end of Q3, we're going to start, the harvest season is going to commence. And once that happens, obviously output is going to increase, and that should bring down prices. But again, that risk of a resurgence in infection cases, because if the country is forced to reimpose a lockdown, so for instance, in Florida, in the US, they've reimposed a lockdown in certain parts of the city. If that happens, then all bets are off. So it's back to square one. And the impact of a second lockdown may even be more severe than the initial one. But with that said, obviously, once the harvest season commences and output increases, prices should ease. What
about oil prices? What are your projections for the coming days?
Well, for oil prices, I think oil prices are still going to remain around the average of $40 to $45 per barrel, because it's clear that OPEC members and their allies, they are adhering to their quota. So definitely the supply cuts will continue to help boost prices. But and also the improvement or the pickup in demand in China and US and Europe. So all this would support prices. But again, there's still a large supply glut in the market that would limit whatever price gains would be recorded from these supply dynamics.
Head of Research at the Financial Derivatives Company, Damilola Kibami, thanks for coming on the program.
Thank you.
Business Morning continues in just a moment. Please stay with us. Welcome back. The central bank recently moved a step closer towards unifying the multiple exchange rates by adjusting the secondary market intervention sale window by 20 naira upwards from 360 naira per dollar to 380 naira per dollar. And with the current development, bids will only be accessible for quotes above 380 naira per dollar and no longer the previous floor price of 360 naira. And that's an indication that lower bids will not have access to foreign exchange allocation within the current money market structure. Of course, this move is coming about 4 months after the Apex Bank adjusted the official naira exchange rate from 305 naira per dollar to 360 naira per unit, and 10 days after the CBN Governor Godwin Emefiele assured some foreign investors of achieving exchange rate unification around the Nigerian autonomous foreign exchange market, also known as the investor and exporter window. Of course, at the 5-year Naira settled futures market of the FMDQ exchange, the Naira is already clearing above 500 naira. But we're being joined now by the Managing Director at AfriInvest Securities, Ayodeji Ebo, to talk more about all these latest developments. Good morning, Mr. Ebo. Thanks for joining us on the program. So the CBN has announced the latest adjustment to importers at an auction on Friday, and that's just some days after it assured investors of plans to harmonize the multiple exchange rates. Does this action move the needle closer to the desired level of transparency in the currency management system that the foreign investors actually want to see?
Yes, thanks for this valid question. We feel that, yes, it's taking the right step. But as you are aware, we have several segments of the FX market. So moving towards, we are trying to see CBN governor has said that it's going to unify the several exchange rates towards the I&E window. And what we saw at the I&E window yesterday was there was form of a depreciation to around 388 naira to a dollar. The movement at the secondary market window, that's the weekly CBN intervention. Yes, that is a good move, but we feel that beyond that, the liquidity is also very key. At the I&E window, we saw when you check the activity yesterday was just around $10 million. Last week, what we saw, there was significant volume, but was majorly most of the multinationals that were trying to fund FX obligation for some of their subsidiaries that made the activity spike significantly. So there's still a lot that needs to be done, especially for foreign investors that came in based on the faith that there will be liquidity of the dollar. So, but now a lot of them are currently being trapped.
How much of confidence does this development bring back to the currency management system, and how does that firm up the local currency against further devaluations?
Yes, I think it is still a scratch on the surface. It's taking that step was very positive, but we need to, the CBN needs to move faster to intervene in the market. The I&E window, what we're still likely seeing there is more of customer transactions, and there's a lot of pent-up demand based on analysis and reports about $5 billion, which is still very significant. So a lot of foreign investors have not been able to repatriate their funds. And for most foreign investors, the signal we are sending is that our market is not liquid. You are aware of the recently published report by the MSCI company on trying to put Nigeria as a standalone, which would also have its implication on our equities and fixed income markets. So this is still just scratching the surface. It's providing confidence, yes, but there's still a long way to go. We need to act fast so that we would not also distract for some of the potential investors that we're supposed to see come in to help reduce the pressure on the CBN when the economy improves. We don't send that negative signal to them.
Perhaps that's why the IMF has been asking Nigeria to merge the multiple rates in order to attract foreign inflows. Now, how do you actually think that the multilateral body would react to this latest development?
Yes, I think for them, they would see this as a step, and they would be watching to see that this process that has started is eventually stabilized. And you know, one thing that the unification will also do is it will reduce arbitrage opportunity and round tripping. You would see, if you notice, between the parallel market, which is the unofficial market, you compare the rates in 2018, 2019 to the I&E window, the margin was really very slim, that there was no incentive for people to go through the unofficial market. And even if there's no liquidity in the I&E window, we still see people can still patronize the parallel market and still get transactions done. But once you have that disparity, as at yesterday or in the last few days, the parallel market has stayed around 461. You can imagine that margin, 461, compared to the 380, the CBN rate, and 388 at the I&E window. So once those disparities, sometimes for business transactions, when you are trying to also negotiate, you are trying to confirm which of these rates should you use for your transaction. Though most investors are tilted towards the use of the I&E window exchange rate, but we feel that the World Bank, the IMF would also just continue to persuade the CBN now that they are holding back on the disbursement from the world disbursement of the $1.5 billion to World Bank. I feel that we may also act faster based on that, because we also need that inflow to help us show up our results because of the pent-up demand. And once also economy also improves, schools resumes, you know that there would also be significant demand for the greenback.
Now, what does this change for the banks, considering Moody's investors' recent comment on Nigerian banks that the current low oil prices and the coronavirus pandemic are threats of renewed foreign currency liquidity pressures on Nigerian banks?
Yes, I think for the banks, beyond the FX challenges that they may have, we've been seeing notifications regarding the minimum or the maximum amount that you can spend on your dollar cards. So, and that would be affecting businesses. Before, people could use their Naira card to even to execute transactions online. But once that is limited, then it also limits business activities. You are aware that the informal sector accounts for a significant part of Nigeria's GDP and the activity. So that would impact the business. But the banks, the major downside that they are suffering from now is the continuous debit for CRR, which is taking a major part of the funds that they can use to generate income, and to generate income is being kept with the CBN.
Since the adjustments, Mr. Ebo, what have you been learning about other exchange rates windows? That's talking about the NAFEX spot market and rates at the Bureau de Change dealers.
I think as this is CBN has taken a step last week, we expect that very soon they should see how they want to create. They should be after the liquidity. If people can buy whatever amount of dollar that they require, and for those that also want to sell. So at the BDC segment, at the CBN segment, and e-window segment, liquidity is what we feel is key. When you check the average activity at the I&E window, even as at between the first 3 or 4 months, was an average of about $300 million per month. But what we currently have, if you check April, May, it's gone down to an average of about $20 million, which is significantly low. Most of the transactions that you see there are negotiated, and it's based on customer transactions. So for the foreign investors, especially for those that have locked in their funds into futures to hedge, and you know it's a non-deliverable forward that most of them bought. So CBN has paid them the Naira difference upon maturity. Now getting the dollars is what is the major concern for most of the foreign investors. So by and large, the focus now should be on providing liquidity. I know the CBN is constrained based on the current level of the dollar, still at about $36 billion. But we are of the opinion that if there is confidence, even at $31 billion, at $30 billion, once there's activity, the pressure would be taken away from the CBN. We've seen that before. Between 2018 and 2019, there was a time that the CBN was actually even buying dollars from the I&E window because of the significant inflow that our market and the window was experiencing. So we believe that we can also get to that level again once there's confidence.
Would there be any major impact that this latest adjustment would have on the derivatives markets of the FMDQ exchange, the forwards markets, and the futures markets?
Yes, interesting. What we would see, when you take the forward rate, you would see that for most of them are significantly above 400 naira to a dollar. So we would expect that as we progress for the new contracts that would also be issued, we may begin to see some form of convergence, some form of convergence to the high and E window. That's what I think we would expect. But the challenge, the downside risk that continues to parade the futures market is non-deliverable forward. So you are only paid the naira difference. If you're out of the money, you are paid that difference. Then you are expected to source for the dollars if you are interested in repatriating at that moment. So now the major challenge now is, even if I get my naira, how do I get the dollars? So now it's amplifying the risk of just using the futures market to hedge, because you can eventually get that naira and not have access to the dollars.
Managing Director at AfriInvest Securities, Mr. Ayodeji Ebo, thanks for speaking with us on Business Morning. And it's time now to review Monday's activities at the Nigerian equities markets with Edidiong Iwan. Good morning, Eddie. So it appears the bears are seriously refusing to let go of the markets.
Good morning, BC. The bears seem to have a firm grip of the markets as market sentiment continued yesterday, with the all-share index declining 1.27% to 24,026.05 points. Of course, with yesterday's declines, the month-to-date and year-to-date losses rose to minus 1.3% and minus 10.5% each. Now, investors lost about 162 billion naira as the equity cap fell to 12.533 trillion naira yesterday. The total volume of trades increased by 31.4% to 189.69 million shares. Value rose to 2.78 billion naira, and all of that changed hands in 4,216 deals. Now, market sentiment remained weak yesterday as there were 14 gainers as against 17 losers. It's a mixed bag on the sectoral charts as two of the financial services sector gained yesterday while the other three declined. Now, after all the losses from the banking stocks last week, investors took advantage of the lower prices to position themselves, and that pushed the counter up by 1.51%. Now, consumer goods took the heaviest hit yesterday by 3.18%, and that was single-handedly dragged by Nestle, which lost 6.51%. Industrial goods declined 2.35%, and that was no thanks to losses from Bois Cement and Lafarge Africa. The insurance sector was the second counter that gained yesterday by 1.05%, thanks to increases in the share price of Cornerstone Insurance, ICO, and Regency Assurance, while oil and gas declined marginally by 0.04%, and that was due to the 0.44% decline on Owando. Well, let's talk to Abdul Rashid Momo, a stockbroker at TRW Stockbrokers Limited, for more. Good morning, Mr. Momo. Thank you for joining us on the program.
Thank you. Good morning.
So with the decline seen in the market, should we be expecting the bulls to return anytime soon?
Not now. Basically, market moves in trends, right? The good thing is that for every drop the market has been dropping, it's still moving within some support levels which have not been broken yet. Market moves in cycles. The peak of our market is always in June, right? After June, we start seeing a lot of decline and people selling off. So this period, the people that actually make money are actually the professionals in terms of the first quarter of the year. You start seeing profits like 20, 30, 40, 50% gains. Within this period, you might be seeing gains like about 5 to 8%. If you don't take the opportunity, you see another loss of about 10%. My advice is, anytime prices drop, you buy into weakness and sell into strength. But a lot of people don't know that. when prices drop, you buy into weakness, and when prices go up, you sell into strength. So we are still going to be seeing some of these drops that are happening, despite the fact that the good thing is that we are beginning to see results from the closed results from the banks that are going to come up with their audited accounts, which will give the market some forms of buffer. But at the end of the day, the long thing that there's still going to be, and I keep saying it, there's still going to be one very strong bull rally that's going to take out all these losses. And that might just last for within a week.
Okay, Mr. Momo, any idea what caused the declines in Nestle and two of the cement giants yesterday?
Basically, if you check out when the market was down, right, there was a report I wrote. It's called A Bearish Bull Day. You know, Nestle is a heavyweight stock. If Nestle sneezes, depending on if it sneezes up or down, you know what happens. So all these things are forms of balancing the market. When prices are dropping, if you check out, prices have been dropping all this while, Nestle was the one going up. So it acted as a buffer for the index then. So now we are beginning to see stocks like Zenith, you understand, moving up now. Zenith too is a heavy player. So that gives room for Nestle to now take some losses and regroup again. It's all about just balancing the market, not to let investors know that the market is either in trouble or the market is either up or down. So it's all these big players are just ways of balancing the market before the next rally starts.
Mr. Momo, speaking about balancing the market, how much of traction can the rights issue by Transcorp Hotel bring to the market at this time?
Which one? Sorry.
The rights issue by Transcorp Hotel.
If you check out Transcorp Hotel, Transcorp in terms of the weight, Transcorp Hotel is not even among the NSE 30 yet. So I don't think it's going to make much effect on the overall index. It's not a big player. And so far, from what we've seen, from when they came, for the last offer they came then, I think about 8 naira or so, we've not really seen much impact. And with our current COVID issues coming to the market this period, I don't know how investors are going to take it, because I think that sector seems to be having issues too, along with the airlines, and that's low patronage. So, well, we'll just have to watch and see what happens at the end of the day.
Okay, Mr. Momo, you spoke about closed periods of banks, but we've been seeing a lot of closed periods and board meetings notices by companies. What does that tell us about companies' results in Q2?
Well, so far, what I've seen livestock, right? I don't know, but they've not brought out any results. But it's going to be audited results, so we need to know how it looks like. But one thing I know is that the first two that normally brings out results, I think the Zenith, the GTB, the Access, that will give investors some hope. And I think they are likely going to do well, because my rule is that I follow smart money. And smart money means following the owners of the banks, or following the owners of companies. They always tend to pay themselves well. So we expect positive results to come out from the Q1 as we wait from the banks.
Okay, thank you, Mr. Momo, for your input on the program. Mr. Abdurrashid Momo is a stockbroker at TRW Stockbrokers Limited. Back to you, BC.
Thank you, Edidiong. And I like what Mr. Momo just said there. He says he follows smart money. Let's see, that's a good one. All right, still to come on the program, an opening call to London as well as the debt and currencies market. Do stay with us. Juliana Olayinka is standing by to update us on the latest business headlines for this morning coming from the UK. Good morning, Juliana. The Chancellor, Rishi Sunak, is to announce a £3 billion package of green investment to decarbonize public buildings and to decarbonize public buildings, rather, and cut emissions from Britain's poorly insulated homes as part of the government's COVID-19 economic recovery plan. Of course, Sunak had been previously criticized that his proposals lack ambition. What would he say differently now to convince his critics?
Good morning, Bissy. I'm not certain of what he could say, but we'll find out tomorrow during what's likely to be a pretty pivotal speech by the Chancellor Rishi Sunak. He'll be delivering it in front of MPs just after Boris Johnson delivers his Prime Minister questions. Tomorrow isn't being dubbed a budget, but it really is almost like a mini budget. After last week, we had Prime Minister Boris Johnson setting out about £5 billion worth of investment over the next couple of years. And much of the focus on tomorrow's speech is about this £3 billion green bill or green pledge, where the Chancellor is trying to upgrade Britain's old and decaying homes and hospitals and buildings. I believe £5,000 will be available to each and every single home across the UK to try and modernise them by making them more efficient when it comes to reducing carbon emissions. Now, of course, there will always be critics, and critics do say that it isn't going far enough, that the £5,000 per home, which I believe comes to the total of about £2 billion, is just not enough to stop or to prevent Britain from reducing their net zero emissions. But, the Chancellor says this is what they're going to be doing to try and create more jobs, try to make Britain a more friendly place, and also to try and improve the state of schools, particularly in the West Midlands and in the northeast of the country, which for so long feel that they have been unhelped by the government.
How much do we know about the call by an anti-gambling charity on banks to improve card blocking systems introduced to help those whose gambling is out of control after it emerged 40% of current accounts offer no help in this area?
Well, Britain, there's no denying it, have a problem with addiction gambling. It apparently costs about £1.2 billion a year. And of course, there are hundreds and thousands of families who are affected in the wake of that. There is an ongoing discussion about re-regulating the Gambling Commission, the gambling industry, making it a lot more difficult for people to lose such vast amounts of money. And just last week, a cross group of MPs did say that they are going to take another look at the 2005 Gambling Commission because it's agreed by all sides that it is not fit for purpose. And so now a charity, a research company, have discovered that banks and current accounts are not doing enough to prevent people to put blocks on their cards to stop them from gambling. There were 2 banks that are doing it so far, but apparently within 48 hours, an addicted gambler can overturn the block that they've put on. So now what this charity Gambling Aware are calling the government to do is to make it mandatory so that all banks can put stops permanently on gambling sites, so that once a gambling addict comes to his senses and decides not to use his card again, that once they've made that commitment, they cannot overturn it.
Business school in London is changing its name, and that's because of its affiliation with a 17th century merchant and proponent of slavery. But one would ask, what's in a name?
Well, what's in a name? A lot to a lot of people, Bissy, and this is a huge, significant, pivotal time of change, I would say, not just here in Britain, but of course in America and in some circumstances across the world. I think since the brutal murder of George Floyd, a lot of institutions, including the Bank of England, including many very highbrow societies in Britain and across the West, have started looking at their past. And they are looking at some of the individuals who are being revered and who are being idolised, and they're wondering whether Britain can say that they are living in a multicultural and a diverse society if they are erecting these figures as people that should be adorned. The individual that you're talking about, Sir John Cass, was a very wealthy merchant, and he was one of the pioneers in the early British slave trading movement. And of course, he made billions, which is why he was able to support many of the institutions that are named by him. And after careful consideration, there wasn't any protesting or bite back from students. It was actually the advisory board and the committee themselves of the former Sir John Cass Business School that decided unanimously that they would no longer be using his name because it doesn't reflect the vision that they have for their business school. So it will no longer be called Sir John Cass Business School, and I believe many people are celebrating that. It will now be called the City Business School until they come up with a name that they believe fits the vision of the school.
All right, Juliana, thanks for those updates. We'll see you again at 1:30. And it's back to Eddie Dion for a rundown of the debt and currencies market. Over to you, Eddie.
Income market. The bond market witnessed minimal activity in Monday's trading session, and we saw mixed sentiment across the different maturities, albeit with minimal volumes traded as yields closed relatively flat. Now, the 27th of January 2020 bond was the best performer with a decline of 32 basis points, while the 27th of March 2050 was the worst performer with an increase of 98 basis points. And in all, we saw about 9 deals worth 5.20 billion naira. The Nigerian Treasury bills market maintained its relatively weak trend with minimal activity witnessed across boards. Soft selling was seen on the short and mid end of the curve, while the long tenor maturities closed flat. There were just 7 deals on that counter worth 311.83 million naira. And the OMO bills, markets where, we didn't see a lot of yields increase in that segment of the market. We just had 9 deals worth 33.25 billion naira. I'm being joined by Ajibola Phillips, the head FX trading at FBN Quest Merchants Bank. Good morning, Ajibola. Thank you for joining us on the program.
Good morning. Thanks for having me.
So how was the first day of trading at the I&E window yesterday after the CBN increased the bid for FX to 380 naira per dollar?
The I&E window, before now, market has traded way above that level. So the news didn't really impact the market, so to speak. That's just because market has been relatively higher than the adjustment that CBN made yesterday. Also, we're still witnessing illiquidity in the market, as just a total of 10 million or thereabouts went through that market yesterday. Market traded between a low of about 380 and a high of 391.45. This morning, market is still quite relatively calm. Market opened at 387.18. We're still not seeing a lot of flows in the market just yet, and that's just because of all of the things, COVID, illiquidity in the fixed income market and all of that.
Ajibola, thank you for your input on the program. Ajibola Phillips is the head FX trading at FBN Quest Merchants Bank. Well, that is on the market review. Over to you, BC.
Thank you, Eddie. We would always hope for a profitable trading day in spite of all. And that's it on today's program. Thank you for watching. I am BC Adebayo. See you next time.